man, I'm feeling a little bit worried. I'm seeing some TA in the charts here, which could suggest we've got a bit of a pickle here on Bitcoin and the wider crypto market. We're also going to preview the Jackson Hole Symposium, where Jerome Powell is set to speak later on this week. I'm going to explain exactly what I'm expecting and why it's so important. If you appreciate these updates, smash up the likes. Do not forget to subscribe, guys. If you actively want to trade with me, you can do so in the Telegram link. Link is in the description. Just secured over 15% spot on one trade, another 10% on another trade. All those details you can see for free. All my trades transparently, so you can see my returns month over month. You can go check that out. Now, check this out, guys. We know here on Bitcoin, we've been in a consolidation pattern, right? It's a bullish consolidation pattern on the longer term time frame. If I zoom up to the weekly chart, you can see it. Right? Big move to the upside, and we've been consolidating for a very long time in this big pattern. Now, holistically, from the bigger term picture, we know a big, long consolidation normally means an explosive move. Now, in this case, from technical analysis perspective, which you can learn at ijazcrypto.com/TA, you will know that this is a bull flag, right? Probabilistically, this is more likely to break to the upside than to the downside. But it can break to the downside a third of the time, and in those instances, you'd expect it to be pretty painful. So what we now want to look for is we want to start looking for indicators which suggest, are we able to start working our way to the top of this pattern, right? The more likely we spend time here, we can play out the bullish scenario, right? Which is breakout, get a retest, on we go upwards and higher, 90,000, 100,000, etc., etc. But if we're struggling to win all the micro battles, the smaller battles, it gets me a little concerned. It makes me a little bit worried. And the first challenge I set in the TA pattern when we spoke about it was that red line there. If you look at this red line here, we spoke about this at length. This red line was very important. This was a support line around that 63,500 mark where we formed an M pattern. We went up, we came down, we retested it, great, we bounced from it. We went up to the top of the pattern here and we came back down. At this point, I called for an M pattern. I said, guys, if we lose this neckline, we're going to head lower. And I drew this dot and I drew this dot. And I said, I'm going to buy the dip at these levels. Boom, we came down, we hit my 2 entry points, I nibbled, and then we got our reversal, right? We managed to bounce post some of the fears around the Japanese yen carry trade. Cool. But now look, we've kind of been slipping, right? Look at these daily candles here. I mean, after the Japanese rebound on this big candlestick here, nice strong 12% day, and it's just been meandering along here to the downside, not showing much impetus to break this trend line. Now, what we do need to see happen is we need to be able to grind out a higher low, because look, that's our low there. We need to grind out a higher one and then keep the uptrend going to eventually we can take this line back again, right? That's what we need. If we can do that, we can get above support, retest it, start working our way back here and trying to play out the bullish scenario of this bull flag pattern. But what if we're struggling? What if we can't? What if we just end up doing this, creating a lower low and lower high and lower lows, and eventually we collapse out of this pattern? That's the fear right now. And what I want to share with you, which has particularly made me concerned, is the following. Let's bring the 200 moving average. Let's apply the 50 moving average, the white colored line and the yellow colored line. The white colored line is your 200, your longer term moving average, and the yellow line is your 50 moving average, right? The shorter term line. Now, what have you noticed happened a couple of days ago? You got these crossing over. This is also known as a death cross. Not a nice name, right? And a death cross normally, if you look at this historically, indicates a period of downtrend. It shows that the market is reversing to the downside. This is not a good omen for the Bitcoin price action. Now, of course, there's certain instances where that doesn't play out and we can recover and you know, this won't be an issue. But right now, it's not looking good. We got rejected right in the cross and we're spending time here. And even if you look at the daily candle today, look at the wick on today's candle. Where did it get rejected? Can you see that wick here? Well, look at this wick on this candle here. We got rejected right there on that yellow line. It's acting as resistance. And that's a little bit of a problem for us because we're struggling to break prices above that level, around that 61.8K level. And even today we managed to touch as high as 61.4. We can't seem to get into that 62s again so that we can start working up here, right? Ever since that wick on the day after the Japanese yen worries where we rebounded, we just couldn't quite get to 62. Right? On that day, we hit 62.7. So we're showing a little bit of weakness there. So that's one thing I wanted to point out to you. The other thing, if I turn off the golden cross, let's turn that golden cross off. Let's bring out our EMA ribbon. Same concept, right? The EMA ribbon, ever since we fell here, we did that. We played out the M pattern. We lost. It's just been acting like resistance. Even on the day we bounced, this big candle here, look where we got rejected, into the EMA ribbon. And every day there, we've kind of run into the EMA ribbon. Look at these wicks on these candles. Every single day, we've closed the candle back below the EMA ribbon. We're not even closing inside the EMA ribbon. Remember, if we want to turn this trend bullish, we need to be closing daily candles above the EMA ribbon, right? Let me show you exactly where that is. You don't want a daily candle close above 61.6 to kind of get some strength here, to say, look, oh, we're reclaiming the daily EMA ribbon. But right now, resistance, 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 we're getting a lot of pressure here to the downside. And it doesn't stop there. Remember what I said? If you've taken my TA course, you guys will know this. There's something called confluence. Confluence is where one or more indicators are telling you the same story, like I'm presenting to you here. I'm not just sitting here going, oh, look, the wind's blowing in this direction, Bitcoin's going to go to 20,000. No, I'm trying to analyze the data. I know and I can see that on the weekly chart we're in a big bull flag pattern, fine. But when we zoom into the daily chart like we're doing now, are we playing that scenario in a positive direction? Are we playing it in a negative direction? That's what I'm trying to figure out. And when you look at this, let me bring out the Bollinger Band. You guys, if you've been watching this content for a while, will know I like the Bollinger Band. What do you notice here? Again, the center Bollinger Band is acting as resistance. It's becoming pretty difficult for us. Look at this. Ever since we fell here, we managed to hold here. We work our way back towards the center red line. And again, just like the EMA ribbon, it's acting like resistance. We need to get above it. Again, that 62,000 level, start trying to hold and start working back to the top of the ribbon. Remember, top of the ribbon also happens to get us above this red resistance line. So that's really, really important. The other thing you have to be wary about here is even if we can show some strength here, what if we just end up going here and getting rejected? Again, another tough resistance level. So we got a lot of work ahead for us here on Bitcoin to not only get up here, but to start breaking above it and moving onwards. And that brings me on to Jerome Powell, because this week is all about Jerome Powell, and it's all about what is known as the Jackson Hole Symposium, where Fed officials get together. Now, if you look at this, we know that the market has basically all but priced in that we are getting a rate cut. That's a certainty, right? If we didn't get one, basically Jerome Powell's rugged the markets completely. Expect plain, expect blood, and the price is going to dump, right? Market is saying you are cutting rates in 4 weeks' time, just like the sun is going to come up that morning on September the 18th. Jerome Powell and the Fed has to cut rates. The question that's more pertinent is, are we going to get a double rate cut? Are we going to get the situation where we cut 50 basis points and 27% of the market have priced that in? They're going, you know what? Jerome Powell is so behind the curve, right? Behind the 8 ball, that he's now behind, that he's going to have to do a double rate cut to catch up. And the problem with this is a bit problematic, because it puts us in a lose-lose situation. If we do get a double rate cut, which you would think is positive, right? We're loosening monetary policy, yay. The market might not like it, right? Think about it. If you're an investor sat there and Jerome Powell comes out of the Jackson Hole Symposium, or even in 4 weeks' time, and he announces his double rate cut, 50 basis points, what's the investor going to think? I knew it. I knew Jerome Powell didn't have control of this. I knew he was behind the curve. He didn't know what he was doing. He's just panicking now. Maybe, he's seen the data and seen that we're driving ourselves into recession. That's why he's quickly pivoting and he's not doing it calmly, right? It's going to be a bit of a problem. But if he just does one, then this 27% of the market is going to be upset to say, oh no, we were expecting 50. He's still not done enough. So I personally think Jerome Powell, unless it's a disaster, will not come out with 50 basis points. He will only come out with a 50 basis point cut if he's seen data that suggests that he is behind the curve, that he has messed up, that we are driving ourselves into a recession, etc. I think his best case scenario is come out, deliver a 25 basis point rate cut, which, by the way, economically doesn't do much, right? It's not going to change your life suddenly, or suddenly mean that loads of money is in the system because interest rates have fallen by 25 basis points. No, it's more signaling to say, guys, that steep rate hiking cycle we've been through has now come to an end. We're now doing our first cut, and we're starting our series of what should be multiple cuts over the next 6, 12, and 18 months, right? It's a good signal for the market. But if you did 50 basis points, market go, oh man, Jerome Powell, you got messed up, haven't you? You're completely behind the curve, so you've got to watch out for that. And Friday, Jackson Hole Symposium, Jerome Powell addresses the markets. We need to listen for that. Does he give us any clues? How are we doing? Is he thinking one rate cut, 25 basis points? Is he thinking a double one? We're going to get some clues on Friday. Markets will move based on that. So we will be watching that together as well. Okay, so that's where we're at, guys. Market sitting here. Fear and greed sitting at 30, a little bit nervous, right? And it makes sense. I'm nervous as well when you look at that price chart. But longer term, I'm not. Right? Yes, some of these short-term signs are not great. Maybe we even need to revisit back down to some support around 53, 54,000. But equally, the bigger picture, the bigger weekly chart, which we have to remind ourselves of every now and then, is that we're in this big continuation pattern. And I certainly would not want to be out of the market right now. I'm not going to want to be at the market. And if you want some hopium, if you're looking for some charts that are going to give you some, some positive feelings, make sure you're in my Telegram group, because I posted a whole bunch of charts this morning to our community members showing them that hodlers are hodling right now and they're accumulating. So people who have diamond hands, who know what they're doing, who've been around for many cycles, they're loading up the boat right now. They're certainly not being shaken out. It's the paper handlers who are shaken out during this small pullback we've seen. And ultimately, the longer-term holders are seeing this as an opportunity to accumulate for what should be an explosive move soon. Hope you guys enjoyed this video. If you like this type of content, don't forget to smash the likes. If you actively want to trade with me and my community, you can do so using the link in the description, ejarscrypto.com/TG. Thanks for watching, and I'll see you in the next one.